Reinsurers in Latin America have enjoyed a respite from large catastrophe events in the past few years, but it's something that remains on the minds of many. Along with pandemic impacts and inflation, reinsurers still have their hands full. Here to discuss a new AM Best report on the region is Eli Sanchez, Associate Director, and Guy Simoes, Senior Financial Analyst. And Eli, we're going to start with you. How would you categorize the risk appetite of reinsurers in Latin America?
Well, I think we have to make a difference here between the domestic players and the international players. In the last year, we've seen some of the international players being more cautious, even though the conditions in the market have improved, meaning that we haven't had any significant catastrophic event or any major losses tied to reinsurers. So they are a little bit more cautious about risks in the region. The domestic players are ones that are capitalized by domestic investors and are operating in the market and established in within the region. They can be a bit more aggressive in terms of what they take. They are also a little bit more cautious in their exposures because normally they are of lower size in comparison to international players. So we can say that the international players are being more cautious because they are facing some different challenges across other regions, but the domestic players are taking advantage of those opportunities that are being left behind and are also being cautious in the way they expose their capital.
Yeah, and John, I just wanted to add for Brazil, Brazil is not a country exposed to natural catastrophes, hurricanes, earthquakes, so forth, so on. But in the last quarter, it was evident that there was a large loss in the agricultural sector, which is a quasi-catastrophe, natural catastrophe exposure. It was caused by drought, climate-related events. So, and that was a large loss in the market and affected local and global reinsurers in the region.
Now, Latin America is home to economies of all shapes and sizes. Eli, are those differences from country to country as well as the political landscapes barriers to entry for global participants?
I think they are, especially when you see countries that are subject to this great tax list on which some reinsurers are not allowed to work, or maybe you see in some other countries that there's some limitants in the way capital can move. For sure, there are limitants to enter there, but that also opens opportunities for other kind of reinsurers, especially for captive reinsurers that can do fronting for those international players in those specific countries. So it opens a window not only for the established captive players, but also for idle capital that can go and invest and try to do these segregated cell companies or pure captive or any other alternative risk transfer vehicle.
Yeah, and for Brazil, like in terms of barriers of entry, the regulatory, Brazil was a monopolistic country for reinsurance for a long time, and the regulatory framework adapted over a century to allow for more competition and global reinsurers to enter the market. So that happened gradually and is still happening, and the regulatory framework is evolving to allow for that.
Guy, how is Brazil's economy faring and what's the level of political risk there?
Well, as the whole world is going through right now a lot of turbulence, Brazil is not different. A lot of volatility in the markets, a lot of volatility in the FX, in the exchange rate, and that's aggravated by the political scenario, which includes the presidential elections in October this year. And I'd say I'd say there are two risks, one direct risk and one indirect risk. The direct risk is the political interference in the regulatory framework to sort of protect the local domestic companies from new entrants and international players. That's the direct risk. The indirect risk is the political instability generating volatility in the markets and devaluating the local currency. So that reduces the capacity that the domestic players they operate in their balance sheets in local currency. They're gonna suffer devaluation as well in their capacity.
Now, Brazil has traditionally been restrictive to outside reinsurers coming in. Is that changing?
Yes, as I mentioned before, the regulatory framework is evolving and is gradually allowing for more global players that some are established for a number of years in Brazil to have more access to the market, have more less friction, and I think that's a positive development for the reinsurance market in terms of a more mature market. It's a more open market, a more developed market. Once you have less protections to allow for more competition. Now, in the first moment, more competition might drive rates down, and it could be in the short term seen as negative. But over the long term, it's positive to have a more mature and developed market.
So, Eli, the areas that are prone to catastrophes have not really been hit by one in recent years. Have reinsurers remained cautious about their exposures in this part of the region?
I think they do. They take a look at all the events that have happened in the past. If you look, for example, Guatemala, when they have Agatha in 2010, so that's almost 12 years ago. Fortunately, there's been nothing significant right now. But for sure, insurers are quite aware of what can happen and how quick it can happen. You have the earthquake in Mexico in 2017. You have several droughts across the region. So for sure, they are aware of that. And I think one thing that's been trying to improve for domestic players and also for international players and from the primary insurers is the way they evaluate their PMLs. They are getting more specific into how they are getting those numbers, what are the real exposures, and there's been a significant development in this area. So even though they are cautious, they are well aware of how things operate here naturally and how catastrophes can happen from one moment to the another.
Yes, and just adding the situation in Brazil, um, in terms of catastrophes, as I mentioned before, the agricultural sector, um, the players are already reducing exposure. It's a newer event in terms of droughts, climate-related changes bringing large losses, um, and it's the only cat-like event that Brazil is exposed to. And the exposures are being reduced already by the reinsurers, domestic and global. But the key thing is to how they're going to evaluate the risks, how they're going to model that, how that's going to evolve, are they going to use technology to monitor that. And I think there's a lot of room for improvement, and that might allow them to have a more measured exposure to this market, and while continuing with improving terms and conditions in the policies and reduce exposure to some regions. But it's definitely a needed line of business in Brazil. It's a large line of business. Brazil it's large in agricultural products, and it's there to stay.
Thanks, gentlemen. That was Eli Sanchez, Associate Director, and Guy Simoes, Senior Financial Analyst. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.